Well, hi everybody, Mindy here, and I wanted to talk to you about the flash crash that happened today in the Forex markets. Now, one of the things that I always try to warn people about when I'm teaching Forex is these exact situations, right? Because, things have been going along, kind of same old, for weeks. This is a 15-minute chart that you're looking at here, dating back to December 10th, right? And as we see, we have normal price action going on here. That's quite normal for the price to move up and down. And while it's moving up and down, it also moves up and down while it's moving up and down, right? And in most situations, the price just kind of goes along, kind of does its thing. And then what has happened in the last few weeks, when we get over here to where we're now getting close to Christmas, what we see is a completely different pattern of price action, right? Completely different, much smaller 15-minute bars and things like that, and really weird price action where the price will just pick a direction and just keep meandering down and down and down or up and up and up. And so anyway, what happened today, I'm going to come over here and keep scrolling this chart forward. Okay, so what happened today, this morning, the price kind of started going down in this particular pair. This was AUD USD, right? And the price kind of, then it popped back up, then it moved back down, and it kind of was making new lows. And then all of a sudden, we'll back it up to here. Things are kind of sort of normal, not, totally what we saw 3 weeks ago and what is normal for a not holiday season, right? And then all of a sudden what we had was, whoa, we had this one 15-minute bar that was 320 pips from its high point to its low point. Woo, that's pretty scary when what you've been dealing with for most of the day are bars that are anywhere from 4 or 5 pips, 2 pips, maybe, here's one that was 15 pips. Prior to this bar in this trading day, 15 pips or so seems to be about the longest bar that you see. This one was 20. It was probably the winner today for being long bar until this afternoon, right? And so what we had here was a 320 pip bar. Now this bar happened in a 15-minute time frame, right? So what this is called a flash crash, okay? And what happened was after the flash crash happened, what we saw was a fairly immediate rebound thereafter, right? I'm just going to go ahead and pull this to current so that we can see what's happening right now. And what happened here is that this was probably the longest 15 minutes of your life if you have never experienced a flash crash before, right? And everybody's panicking. A lot of people may have margin called today because typically what happens is new traders who do not understand the risks involved in Forex, they will not have enough money in their account to accommodate a move like this, because what you have to understand is if you had a one lot trade in here, right, with a pip value of $10 a pip, and the price, if you had done a buy per se, because the price had been moving down, maybe you're a counter trend trader, and if you had done a buy along in here somewhere and were waiting for your trade to start becoming profitable, most people cannot afford 320 pip move the wrong direction on their trade, especially if they had multiple trades going on, right? Because 320 pips times $10 per pip, if you were in this trade the wrong way, this one trade would have cost you $3,200 in usable margin when it was at its low. Okay? And that's if you went into it right here and were in the wrong way. Now, if you were in this trade going the correct way, right? If you had a sell up here and then this happened, a lot of times you do not get the profit that you expect to get because several things happen. Okay, the first thing that happens is when this price was in the middle of this move and it was going down 150 and 20 more and 10 more and then 100 more. When it's moving like that, what happens is the spread increases significantly, right? Instead of the spread being, depending on your broker, maybe anywhere from 0.2 of a pip to maybe a pip and a half or something for the spread, the difference between the buy and the sell price. When you have moves like this, sometimes the spreads will go up to 40 or 50 pips, right? So even if you're in the trade the right way, sometimes you're not going to get the amount of profit that you think you're going to get. Okay? Sometimes you luck out and you can make a ton of money. If you were in this the right way and your broker didn't raise their spreads and you closed the trade at the very bottom, yeah, you would have made about $3,200 on this one move in 15 minutes if you had exited the trade right at the bottom pip. But here's the problem with moves like this. When you have price bars like this that move 320 pips in 15 minutes, in the first place, you have no idea where the bottom's going to be, right? Because what this price did, it did not go straight from here to here. What it did is it went down, bounced up a little, went down some more, bounced up just a little bit, bounced down again and again and again. But no matter what kind of indicators you have on your chart, nothing in the way of an indicator is going to tell you where the bottom of a move like this is going to be, right? If you had Bollinger Bands on this trade, the Bollinger Bands are not going to tell you. If you were using accelerator bands, I don't care what indicator you pick out. No indicator is going to ring a bell down here when you're at the bottom and say, ding, 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 we're at the bottom, time to do buy. Nothing in the way of indicators is going to be programmed in a way that it's going to identify the bottom of a move like this. Now, the thing is, could this bar have continued on down another 300, 400, 500 pips? It absolutely could have, right? Because if you have a bar that's going to go 320 pips in 15 minutes, there's nothing that says that the panic that's causing this to happen won't continue, and maybe this bar will go 600 pips down or 1,000 pips down, right? Most people who are new to Forex trading have never seen anything like this before today. And it's very, very important to trade your accounts in a way that you can survive moves like this. Okay, and that's what I teach in the mentoring classes that I teach, in the trading classes for Forex that I teach. And I've been teaching Forex now for 15 years. I've been trading it for 20. So I've seen many situations like this. Okay, but what I want to tell you is that depending on how many positions you had open at the time and how many pairs that you had trades going on in when this happened, it can literally margin call anybody's account relatively quickly if you have multiple trades like this going on at any one time. Because this is the AUD-USD pair, right? But we also see these crazy bars in almost all of the JPY pairs today. Here's AUD-JPY, same time. They all happened at the same time. This bar on USD-JPY was 557 pips tall. Okay? See, look, the top of this bar is at 75.74, right? The bottom of the bar is at 70.20. That's 557 pips. Let's go look at some of the other JPY bars. Here's CAD JPY. This price bar was 287 pips from here to here, right? CHF JPY, this bar was 417 pips. The EUR JPY was 456. The GBP JPY was 543. The Nzd JPY 365. USD JPY was 406. Whoa, baby, that's a lot of pips. Now, if you were in all those pairs going the right way, you probably came out of today smelling like a rose if you were able to get out of your trade down here somewhere near the bottom of the bar. And you notice I'm making a big circle, right? Because we didn't know where the bottom of the bar was, right? Yeah, we might have thought we were at the bottom of the bar right here. We might have thought we were at the bottom of the bar here, or here. Or we might not have thought we were at the bottom of the bar yet when the price was here, right? Because when the market is moving crazy like this, trying to identify the bottom is almost impossible. And who would expect, after weeks and weeks of having price bars, anywhere from this price bar is 6 pips tall, right? From some of these bars are 3 pips tall, 4 pips tall. After you've been lulled into complacency over the last 2 weeks, seeing as how it's been holiday season, right? And you've had very small, very slow price action where it just kind of piddles one way and piddles the other. And then nobody is ever prepared for a flash crash. Never. Nobody is ever prepared. People don't sit around and think, well, what if my trade goes 565 pips the wrong way today? Am I going to have enough usable margin to ride that out, right? And so anyways, very, very important to know how to deal with these things when they happen and how to protect yourself as best you can from moves like this. Now, the fact of the matter is, one of the things that I teach in my mentoring classes is I teach something called hedging, right? Hedging is where if I'm doing a buy trade and I'm thinking that there might be a possibility that my buy trade might go against me, what I do is I figure out a way to hedge that position. And so I'll place a hedge somewhere below the trade. If I've made a buy trade, I'm going to put a sell order somewhere below my trade, just in case it goes the wrong way, right? And if I'm doing a sell trade, I'm going to put a buy order to hedge that sell somewhere above the trade that I'm in. And I will hold those hedge orders until I know for sure that my trade is profitable enough that I can put a profit stop on it, right? Now, if you're trading in the United States, you do not have the availability to do hedging. That's one of the reasons why I always recommend that U.S. traders trade with foreign brokers who will allow you to hedge your trades, right? And if you need help finding a good foreign broker to deal with, go to my website, www.mindyyost.com, and on my website you will find links to brokers, foreign brokers, who take U.S. clients and allow you to protect your equity by hedging. Okay? Now, one of the things about moves like this, let's say that I had an order, let's say I had a buy trade somewhere up here, right? And I had not put a profit stop on that trade yet. I didn't have, a stop that was protecting profit on the trade, right? And then this big dump happens, but let's just say that I had an order for a hedge somewhere right in here. Let's just, for an example, we'll say that I had a sell order at, let's just use this mark right here, which would be 108.60. We'll pretend like I had a sell order right here. Well, the thing is, that sell order would be a stop order. Stop orders are always subject to slippage, right? So even that hedging order is not a guarantee that my sell trade to hedge the buy that I theoretically have up here somewhere is going to go in where I have the order placed, okay? Because stop orders are subject to slippage. So what that means is that if the first volley of this move down went from 108.65 to 107.80, right, as the first tick between, the top of the bar and the next tick, if I had an order for a sell in here at 108.60, my sell is going to be picked up at 107.80, or wherever the first uptick is in the down move, right? So let's just go see, let's change this to a shorter term time chart. Why don't we change it over to a 2-minute time chart, and we'll find this big move. We're going to have to back the chart up to do this, but we're going to find out what this move looked like on the 2-minute chart. Okay, and here it is. That looks like the one, doesn't it? Okay, so this first volley here, and now we could take this down to a 1-minute chart, and it would probably be 2 different bars in here, or we could take it even lower and put it on a tick chart, right? And find out where the exact ticks happened through here. But that's carrying things to kind of an extreme. But let's go ahead and change the time frame on this to a 1-minute chart, just so we can see if what happened during this 2 minutes of the first volley of this move down. And so we'll have to back the chart up some more to get to that spot. Okay, so here's what happened during this 1 minute. The first volley of this move was literally a 1-minute bar that was 302 pips tall, right? So if I had had a stop order, right, on my trade at 107.80, let's just call it 107.80, my stop order would have probably been picked up somewhere right down in here, because it's not going to pick up a stop order until there is at least an uptick in the price, right? because what happened is the price sailed right through the stop order that would have been placed here, right? So that's what can happen, right? And then what we see is the price bounced up to here, right? It went from here, it upticked just a little bit, it fell lower, right? Then the price, 2 minutes after this bar happened, at one point during that next 2 minutes, the price went back up to here, which is more than 50% of this bar, right? But then it came back down again 2, 4, 6 minutes later. See, all of these bars are in that first 15-minute bar, right? This bar was at 1635. So, trying to figure out exactly when this low hit. It would have hit between 1636 and 1637. Somewhere in that, you know, I live in Kansas City. That would have been at 436. During that minute is when it hit the low. Okay, but let's go back to the 15-minute chart now. And what we see that has happened if your account survived the flash crash today, and I hope that it did, what happened after this, as the price started rebounding, we literally, within 1, 2, 3, 4 bars, these are 15-minute bars, so this is 1 hour of time. Within 1 hour after this bar, the price had recovered most, not all, but most of the move down, right? Or at least a good percentage of it, right? And now what's happening is the prices went sideways for another hour or so, and now the price is beginning to move down again, right? Now, everybody wants to know, why did this happen? You know, well, there's a lot to this on why this happened. It all started actually when Apple made an announcement today about what their projections for their company were going to be for the coming year. And this morning I saw an article or somewhere in one of the news sites that I read that Apple was going to discontinue trading on their Apple stock in the after hours trading. They planned their announcement for after the stock market closed, right? And they were going to discontinue trading during the time that they were going to be giving their announcement. So that kind of told everybody, if you're a stock trader, that they were probably expecting to say some very bad news for Apple stock, right? And so let's just go see what happened to Apple stock after they took the pause off of the Apple stock trading. So that's AAPL, I think. Yeah. So, and see here, this is the gray shaded areas are the after hours stock trading, and then the white areas are the daytime stock trading hours, right? And so anyway, at the end of the regular trading day today, their stock was actually moving back up again after, you know, a little decline. But then what happened is here's what happened when they were giving their announcement. See, they turned off the Apple trading right there, and then this is the bar that happened because of the announcement that they gave today, right? And so anyway, Apple stock has taken a huge dump today in its value. Let's see, at the end of the normal trading day today, the price on Apple stock Well, I don't know if I have the right one or not. Let's see. Okay, I don't know if this is the right one. Oh well, it was at 157.90, right? And it dropped to 144.46. Well, that's a lot. Okay, it's over $100. 157 to 44 is about $115 dump in this stock price right here on AAPL, right? And it bounced up a little bit. This is all in the after hours, and right now it's just kind of gone sideways down here, right? But what happened is, you're saying, well, why would this affect the currency prices, right? Well, there's a lot of reasons for that. For one thing, when something like this happens in the stock market, what that does is that puts the fear of God in all traders, and they get very scared. And so you've probably heard people say that, you know, Forex markets are based on two things: fear and greed, right? Well, because what happens is people are greedy. Obviously, they want to make money. That's why they trade. There's nothing wrong with that, but you have to keep it in check, right? And then when things go bad, they get very, very afraid. And so what happens is they start closing stuff. They go, oh my gosh, if this can happen to Apple, it can happen to my other stocks. If this can happen to Apple, it can happen to my currency pairs. And so what happens is a little mass hyperventilation is happening here. And there is fear in all of the markets, right? So something scary that happens in the stock market will flow over to the currency markets. Now, when people are afraid, especially in the stock market, when those people also trade currencies, they move their money into the Japanese yen. That's just what they do, right? And so, as all that panic was going on in the stock market, because when Apple took the dump, a lot of other stocks followed, right? A lot of other tech stocks followed. And so what happened is, big fear in the market, people start taking their money and putting it into Japanese yen. So this big drop here was not a situation where the AUD was losing value. It was more a situation of the JPY pair, the JPY currency, gaining strength. And it was gaining strength because people in the overall markets were afraid. Okay? And that's why we see an almost identical move on all of the JPY pairs. Now, the different pairs do trade a little differently. That's why the variation in the bar length. But the picture is pretty much the same, right? Although on some of the JPY pairs it was 356 pips, on other of the JPY pairs the bar was 400 and some pips, and on other of the JPY pairs it was 450. But it doesn't matter which one you pick. Some of them went much further than others. This one went 557 pips. But they all of the graphics, if you look at them one at a time and you're not looking at the number scale, the graphic of this move looks pretty much the same on all of them, right? So anyway, that's what happened in this flash crash. It all kind of started with the Apple announcement. So when you're trading Forex, you have to be aware of what is going on in the world, not just in the currency pairs, you know, in the movement, the normal up and down movement of the currency pairs, but you have to be aware of things called fundamental elements that can move the Forex markets, right? We have technical, things that we can watch. We can put, 257 different indicators on this chart that'll give you an idea of where the price might move next. We never know where the next bar is going to move, but technical indicators will give you an idea of potentially what's most likely to happen. If the price does this, then it does that, right? But fundamental things are things that essentially are concerning fear and greed in the overall market or in the overall geopolitical situations of different nations, right? Or economic data on different world economies, things like that. Those are fundamental things. And the fundamentals will move markets far more than any technical issue, like just because you're outside of a Bollinger Band, or just because you've broken a trend line or a moving average or whatever. Those are all technical indicators. But fundamental issues, like having Apple give a very, very bad report today, are going to move markets much more than any kind of technical anything. Okay? So I just wanted to talk about that, tell you what happened. Now, the pairs that took the biggest hit today on this were the AUD pairs. If we go to any of the AUD pairs, this is the AUD JPY. Let's go over to the AUD USD. It's going to look very similar. AUD USD lost 320 pips today against the dollar. Against the GBP, the British pound, the AUD lost 781 pips, right? In 15 minutes. That's almost 800 pips in 15 minutes. And on this pair, it's already recovered back down to where the price was during the bulk of the trading day, right? This one has already recovered almost everything. Now, why is that? Why would this one recover so well from this move and the other pairs haven't recovered this well? Well, it's because when this bar went up, GBP was gaining strength and AUD was losing strength, right? But the situation with the GBP is not very good right now. And this pair never would have made a move like this in a normal circumstance, right? Because overall, the GBP pairs over the last few days or so have been, kind of losing ground, over the last couple of days, right? So anyway, that's kind of what happened there. But let's go look at some other AUD pairs. Let's go look at AUD CAD, see what happened to it. But the AUD lost ground against the CAD. That one has recovered, not back up to where it was like the GBP, but close, AUD CHF, okay, it took a huge dive, 274 pips. It's come back up about 3/4 of the way. We looked at AUD JPY. Let's go to AUD Nzd. Okay, AUD Nzd has recovered back up into the general range of where it was trading before, right? A lot of times with flash crashes, this is what you see, and 24 hours later, these prices will probably be trading, most of them, not all of them, probably be trading right back where they were trading before. Now, the ones that might not are the JPY pairs, because the JPY pairs, what happens with JPY, you can see that most of these have only recovered, maybe 3/4 at most of the way back up to where they were trading prior, right? Now, hopefully, the price will get back up into the range where it had been trading, right? But it kind of depends on what happens tonight, later tonight, when the European traders come in to the market, and they might read what happened today with the Apple stock, and they might say, yeah, this Apple stuff is so bad, they're right, everything's gonna crash out. And then tomorrow we might see even lower lows than this, right? Because this is the kind of stuff that can start the ball rolling on having a huge market correction. So if we go back again to our Apple stock and take a look at it, right? If it can do this today, let's change this now from a 15-minute chart to a daily chart. What we see is that Apple's been dropping for since, looks like it had its last high on 10/3. What would that be? October 3rd, right? So since October 3rd, it's been taking a pretty bad hit in things. Say, so in the big picture here we are. But things like what happened today, those kind of moves can be devastating. And if the fear that happened today, see, the big dive here isn't even showing up, because on this daily chart I don't have it set up to show the after hours trading. Let's put that in here so that you can see it. Let's try moving it to a 4-hour chart. Okay, there we can see it. So here's that move, right? So anyway, the thing is, this is the kind of thing that can really start a huge downward spiral. I'm not saying that that will happen. I'm saying that you have to watch out, because it could. Because see, the price really was not all that much lower than it was here on this most recent previous low, which was on the 24th, okay, of December. So the price had kind of chugged its way back up a little bit, and then today we went not only to this low but lower, right? And we did, in 15 minutes of time, we lost all of the value in Apple that had been gained by this chugging its way back up this ladder for the last 2 weeks, 2.5 weeks, in 15 minutes. So I don't know, tomorrow, this fear could take over again and move this down a lot. And if we wanted to see what that would look like on the Dow, let's go check what the Dow Jones did during that Apple thing. Now it looks like it didn't bother the Dow much, and I don't have all the indices in here. So, but anyway, that's what's moving these JPY pairs, is fear in the market. Okay, and if the fear continues, these prices on JPY pairs will probably continue to go lower, and maybe it'll just kind of chug its way down for a while and not have any more of these dramatic moves. Or maybe the price something will happen tomorrow to make some other big fear element in the market. I don't know. We'll just have to wait and see. But what we do know for now is that a lot of people probably margin called out today, and a lot of other people probably made a lot of money and did not know where to close their profitable trade. So the chances of them actually getting out down here, and I'm making a big circle down here of about 1/3 of that bar length, right? the chances of them getting actually out of a sell trade in this area are usually pretty remote, because when this is going on, it throws your brain into, like, you know, crazy land. You don't know what's happening. You don't know what to do. And sometimes you can try to close a trade, and depending on what broker you have, maybe they have put a pause on trading. So maybe you can't close a trade even if you want to at that time. Or maybe it's a situation where the spread is 40 or 50 pips wide at the time on the pair that you're trying to trade, right? That can happen during moves like this. Today, I know for a fact that with my broker, by the time I started actually looking at what the spreads were, I saw several pairs that had spreads in excess of 45 pips, right? Now, I don't know what all of the spreads were, and they weren't that high on all of the pairs, but I did see several that were in that range. And so that makes a huge difference on how you can exit your trade. So anyway, I just wanted to show this to you. I wanted to explain what it is. I also wanted to tell you that there are ways to at least have some protection from situations like this. And I teach you those strategies in my mentoring programs. So if you're interested in that, you can go to my website, which is www.mindyyost.com, and take a look at some of the mentoring programs and classes that I offer. But when things like this happen, when a bar like this happens, that literally drops 300 pips, and we saw that the bulk of this happened in 2 minutes, the chances of getting even a protective trade in where you expect for it to go in is not going to happen. Okay, you might get your protective trade in, but it could very well be much lower than where you expected it to be, and you need to know how to deal with that. You also need to know how to structure your trading in a way that you know that you would be able to survive a situation like this, even if you had 3 or 4 or 5 open positions in a bunch of different pairs where this is a possibility. It's always a possibility. But if you structure your trading correctly, there's no reason to margin call on a situation like this, right? And so anyway, that's what I wanted to tell you. I hope that you were one of the lucky people who were in this trade the right way, and I hope that you were able to get out of your trade somewhere down here in the lower third of this bar, and you made a whole bunch of money. Nothing makes me happier than when people get lucky and make a whole bunch of money on a trade they're holding, because nobody's going to expect, nobody is going to expect to make 100, 200 pips in a matter of 2 minutes off of any one trade that they take. It's just never going to happen. You know, now you might have thought, oh yeah, I think this pair is going to drop 300 pips over the next few weeks, you know, or a few days, whatever. But nobody expects this to happen in 2 minutes, much less a 15-minute bar. Okay? So anyway, that's all I wanted to tell you. And what caused this? Fear in the market. That's what caused it. Okay? There were some other pairs too that had a pretty trying day. The AUD pairs did. The GBP pairs, you know, they had some pretty big moves today. Gbp Nzd. Look at this bar, would ya? This bar is 608 pips tall, but it couldn't decide which way to go. Here's where the price had been trading. We get to this 15-minute bar, and it went up, you know, 400 pips. Then it dropped to where it was down 200 pips, and 15 minutes later, it's trading right in the same range that it was trading in before this happened. But things like this are what can literally margin call you out so that you are out of the game by the time the price gets back to where It was trading before the event even happened. Okay, so anyway, pretty crazy day in Forex. Welcome to 2019. I think we're going to have a pretty crazy year in Forex, and I love volatility, but this is even a little out of my league. I'm not crazy about this kind of volatility. So let's hope we don't see any more of this anytime soon, but I can guarantee you these situations will happen again. So the next time they happen, I want you to be prepared for them. Okay? And you have to know that these kind of things can happen on any given day and on any given bar, because we never know, no matter how we do our trading, where the next bar is really going to go. That's kind of the fun of Forex, right? So anyway, that's all I have to talk about. And I hope I've said something in this video that has helped you realize a little bit more about Forex that you didn't know before. Okay? So thanks for listening, and I'll see you again soon. Bye for now.